We have a lot to review because 2023 was quite a year. A constant Fed fund rate watch, anticipating drops in interest rates, wondering how buyer demand could survive, figuring out what happened with sellers, and how this would affect prices. So let's get started. The topic that has been front and center is interest rates because they have a tremendous impact on buyers. Now let's take a look at where rates started in 2021 and what has happened since then. Buyers and everyone that refinanced in 2021 were spoiled. Then the Fed, realizing that inflation was not transitory and was out of control, felt compelled to increase the Fed funds rate beginning in March 2022 for a total of 7 rate increases, totaling 4.25% in the year. 2023 brought 4 more increases, totaling 1% in an effort to reduce inflation, which was causing mortgage rates to skyrocket. Remember, the Fed funds rate is not the mortgage interest rate, but one of the tools used to curb inflation. Mortgage rates are determined by trading in the bond market. Now, higher rates obviously impacted buyers needing financing. During 2023, a buyer could experience or see a 2% increase in rates. So let's see what that does to monthly payments. Let's assume a $400,000 loan at 6% interest. The principal and interest would be $2,398. If they wanted to buy a house in October or later in the year, the monthly payment on $400,000 at 8% would be $2,935, a $537 increase or 22%. That's an 11% increase on the monthly payment for every 1% rate increase. Now, the next question could very well be, what have rates done to buyer interest? Take a look at this chart that shows the 30-year fixed rate alongside mortgage applications. Higher rates definitely impacted interest. Going forward, it appears that the interest rates will need to be between 5 to 5.5% in order to find that sweet spot for buyer interest to return in a meaningful way. Now, this is why everyone is watching inflation indicators and the Fed activity, trying to forecast where rates are going because it has such a tremendous impact on affordability. I hope you're enjoying this video, and if you are, please like, subscribe, and hit the notification bell. And now, in the midst of all this turmoil, we all want to know what happened to prices during 2023. In May of 2022, median home prices peaked at $480,000. Then, over 20 months, they decreased by 13% to $415,000 in December 2022. Over the calendar year of 2023, the median price rose from $415,000 to $434,172 in December 2023, a 4.6% increase. One would have thought that with an increase in interest rates throughout most of 2023, creating a smaller buyer pool, prices would have fallen instead of rising. The answer goes back to another key variable, inventory or homes on the market. What many did not predict was that what has been termed the locked-in effect that homeowners felt. Yes, buyer demand fell, but so did homeowners with an interest to sell. They could have considered selling, but if the next house was more expensive and included a mortgage, they probably said, well, you know what, I really think I enjoy my house and the low interest payment more than I thought I did. Here's some interesting stats I mentioned in a previous video. As of the last quarter of 2022, Redfin reported 82% of mortgage holders have a rate below 5%. 62% have an interest rate below 4%, and 23.5% have an interest rate below 3%. These sweet mortgage rates and the prospect of higher priced homes reduced the available homes for sale, which contributed to the rise in the median home price during the year. Let's see how the number of homes for sale in 2023 compared to other years. 2022 was really an anomaly and had a lot going on. Prices peaked in May 2022, and then in September, rates rose above 6%, setting the stage for sales to fall in the third and fourth quarters, and listings languished on the market. Now, the number of homes for sale in 2023 started out higher than the previous 3 years and ended about 2,000 listings lower than the first of the year and helped prices throughout the year. 2024 began at a level below 2023. Besides interest rates, inventory will be a significant contributor to prices. Now, I mentioned the impact of higher rates on mortgage applications, but to really appreciate the full impact of what has happened in 2022 and 2023, we really need to look at sales. Let's look at this sales rate chart and correlate this with interest rates. Remember, 2021 was when buyers and sellers who refinanced were spoiled and enjoyed rates under 4% and even 3%. Then 2022 came along and median sales prices peaked in May at $480,000, right when rates hit 5.5%. Beginning in September, rates were consistently above 6%. Then comes June 2023, where rates broke 7%, reducing affordability even further. Now, the result was home sales dropping to a level not seen since 2008. Now, you know why interest rates are under 24-hour monitoring, and every inflation, employment, GDP report, and Fed meetings transcript is being scrutinized. Now, the good news, the Fed has not raised the Fed funds rate since July of last year. And economic reports indicate that we're in a much better place for the inflation rate. And mortgage interest rates peaked in October 23. Thank heavens. While the rate of inflation is coming down, we're still living with the higher prices from recent inflation that's already been baked into the cake for everyday living costs. Just because the rate goes down doesn't mean that prices roll back. As interest rates fall, as predicted, buyers will benefit from increased affordability. Interest rates peaked in October and have been on a downward trend since then. Rates will be a key factor for 2024. Now, in a close second is inventory or homes for sale. A lot will be dependent on sellers. They will have more certainty about the market, experience a larger buyer pool, and lower rates on the buy side. Now, the inventory or homes for sale will be key in determining where prices go and by how much. Well, that wraps up what happened in 2023 and what's in store for 2024. Now, if you'd like an update during the year, reach out to me and I'll be glad to review these key variables and where the market is heading. Thank you.